Ladies and gentlemen, boys and girls, it seems like it's been a very long time. I guess we had some holidays or something, and I had a little bit trip, so I haven't had you guys generate a bunch of ideas for me for a while. So, as always, again, if you're new here, what we're looking to do is have you guys in the chat and generate, just tell me what it is that you want me to look at. And myself, Michael Nauss, I'm a chartered market technician, I'm a quantitative trader. I'll look at your charts and kind of chat about whether I like them or not. Sometimes I get some really good ideas from this one. So, the fact that I came back from Toronto, I thought it was New York, Toronto last week, um, means I'm kind of a little bit behind the game. So I'm looking for you guys to help me out here. But in the meantime, while you guys ask away, I wanted to do a little presentation and show you guys something real quick that I thought was absolutely insane when I did my research last night. So the black line up here, this is the S&P 500, the ES. The red line is the net positioning of large speculators. So it's a little bit of a history on this number. I know for people who hear a lot, I have to talk about this all the time. I just think it's critical right now. It's not always something that's part of my analysis, but the idea is the when you take a trade, your broker then discloses to the CFTC, the Futures Commission, what you did, whether you're long, whether you're short, what is it that you're doing. And it separates us. We would be small speculators because, the size of the position we have and, the fact that we're not billionaires. And then it separates us from the large speculators. So what this red line on the bottom, it's tracking the position of these large speculators who are very often wrong. I would say even probably wronger than the small speculators. And the idea and the reason that I look at this is the same reason that people will look at sentiment data. It's sentiment data doesn't matter. No one cares about sentiment data unless you're weighted too heavy one side or another. If you're too long or you're too short, as as we're seeing with open, then sometimes you can get these flips. If everybody's short open and then some good news comes out about open and then it rips, you get these kind of trap trades. Again, GME that we had back in the day that, the shorts got killed and unwound and moved on with their lives. Then they went to open, they got killed. Eventually they'll unwind and move on with their lives. But in that meantime, in that bit between them getting killed and not, there's potentially some great trades to have. Now, we are seeing that on this S&P 500 chart. Not only the fact that they're short 200,000 contracts when the market's at all-time highs, but let's track this line some. They started shorting, so right here is like the zero line where their net kind of break even, right? And because it's a net, it means that not everybody is short. It just means way more people are short than are long. So there's probably a couple guys out there with just massive short positions on the S&P 500. And they started to short and they shorted more and more and more as the market is doing this. So as the market's ripping, these guys are shorting. And today we just kissed a new all-time high again. And the best way to know that the shorts are in trouble is when the stock is hitting a new all-time high. You can't, I always pick on AMC. Sorry for the shorts. And right, these shorts have won. This thing is down 99 point whatever, 99.9% from this highs and likely going bankrupt. So the shorts here aren't worried. The shorts here on the SP 500, they have to be worried because we just kissed a new all-time high today. So the longer this condition remains, the more likely we have this massive blow off top. And this number only updates once a week. So just let you know, on the weekends, this number updates. So we won't see this tick up in real time. But what I suspect we're going to see one week is we're going to see just a huge rip in the market. Some insane news going to come out. The market's just going to absolutely soar. And then on the weekend, we're going to see a big tick up. And then a couple weeks later, you'll hear in the news XYZ hedge fund exploded because they were short the market at all-time highs. What's even more egregious than this is the Russell. So here's the Russell 2000. This is the small caps, the little guys. And they have been heavily shorting into this as, again, we hit new all-time highs in the Russell last week. There hasn't been many all-time highs in the Russell. The Russell's a pretty shitty index overall, which makes sense because you kick out your best players. They're short. And if you look at this just last week or so of action, as we've been hitting new all-time highs, they shorted more. So they are leaning into these short positions. Same with the ES. As we're hitting new all-time highs, they shorted more last week. They're leaning into the short. It's the craziest thing I've ever seen. Ethereum, right? This is one of those things. Looking at Ethereum, everyone was long Ethereum up here. So it makes sense that we're going to tick down a bit, right? Because these guys are always wrong. So as soon as you see this positioning neutralize a bit, maybe that's when we break this all-time highs on on Ethereum. And then crude oil as low as it's been. So that's interesting as well. So maybe long crude, and then also Russell, and then we've got the ES. So these things are really, really short. So that's just kind of my rant. That's the only thing I see that's interesting in the market. I've been saying this for ages. Until this unwind occurs, I think Godzilla could march on Wall Street and it wouldn't push the markets down because too many people are short. They have to cover. Until that neutralizes, that's what happened. That's what I think is going to happen. So take a look at Lyft. I see someone's really interested in Lyft, and then we'll start going down the list. From a technical point of view, it's, straight up. That's obviously a good thing. After a big gap like that, due to some sort of earnings, I think it's all just about holding that gap. You do like a little fib or a little pullback or something in this gap, right? And you say, okay, well, you want to hold, say, this 21 area. And as long as you're holding the gap, that's a good thing. If things fall apart into the gap and you end up closing the gap, that's where people have a bit of a bad time. But it looks great. If we go to a weekly from a longer term chart, this has obviously been really underperforming the king, which is Uber, which has been doing great. Lyft is, right, the redheaded stepchild. However, looking at the long term area here, you can see this $20 has been a big deal. So as long as, for me, if I'm trading this, if we hold 20 bucks, I'm good. If we lose 20 bucks, I think it's time to go. ATCH. All right, so we got to start these rants already. Sorry, it's no offense to anyone, but this company is most likely going to zero, and I don't think it would shock anyone if it does, because again, always some people look at these things and say, hey, if it only gets back to 800 bucks, I'll be a millionaire. Well, it's never been to 800 bucks. What happens is this company completely fell apart, and then right here, it had to do a 1-to-60 split. So what does that mean? If your stock is under $1 a share, you have to play games in order to get your stock over $1 a share, or they kick you off the exchange and then you go to the pink sheets. And nobody wants to be on the pink sheets because it just shows that you just can't get on the easiest to get on exchange in the world, which is the NASDAQ. You get kicked off that. So you shrink your float and you play a bunch of financial games to push over a certain amount. And if that's generally the kiss of death. Often when you see these reverse splits, it's the beginning of a big move down. It just means that your company has no way of getting above $1 in a legitimate way. They have to play games. And when you're playing games, you end up, tanking and tanking and tanking and tanking. So the fact that this can't get above and will likely have to do another one of those reverse splits is not ideal. It's not what you want to see. This is not a stock that I would touch for any more than a day trade because it wouldn't surprise me if you're playing something like this, you should be looking more on the fundamental side. I know as a CMT, scary for me to say that, but they're obviously losing a butt ton of money. The question is, how long can they lose a butt ton of money before they have to go back to you and raise more money, which is what offerings are, right? That's what killed AMC, is offerings into the ground. AppLovin, there's really nothing to say here, right? All-time highs. This is the opposite of that other chart. There is no reason for me to bet against this thing at all. Broke all-time highs here, and then it's just been up so many days in a row. Obviously, short term overextended. So this is where things like Fibonacci can come in handy, or anchored VWAP. If you want to anchor VWAP before the gap, say, okay, maybe this thing's going to pull back to 600 at some point soon. It's got to have a red day at some point in its life, but you broke an all-time high. The overwhelming demand for this stock is amazing. So generally speaking, this is not how bull runs come to an end, going up every day. What can happen is it goes up every day, does some sort of a harsh pullback, and then consolidates sideways. So no trade for me on this one right now, but something that is super interesting. Open, full disclosure, I am in Open. I've bought some Open right here around $3. You can see I actually have this chart up here. For what I've sold some at 10. Now the question I have with Open, like I talked about with GME and all of that, is as soon as the shorts cover, the game's for me, the game is over. So I'm just watching, and every 2 weeks we get new short data. And right now it's still like 26-27% of the float is short. So there's no reason for me to cover when that much of the float is still considered to the short side. So we continue to push up here. We continue to consolidate in this range. I'm just looking to see if we make one leg higher. When do the funds that are short this blow up? Right, with what is Melvin with GameStop? As soon as Melvin blew up, you can actually mark the top. As soon as Melvin blew up, that was the top, and it went down because that demand, that useless demand of people just having to buy the stock because it was moving higher, was over. So as soon as I start seeing articles in Open that someone blew up, then it's time for me to take the rest of my profits and move on. I'm hoping this is just this. If you were to Google what's a bull flag, it's a stock that moves up and then just moves sideways for a couple weeks. So until it's, down in the $8 or up in like the $11-12, this is for me a kind of a stay away, and it's just a bull flag. Right? Just that's a good thing. You don't want these things to spike up and come down. That's what really started to interest me here in the Open chart, is you had these spike ups, but they couldn't sell it back down aggressively. It just moved sideways, spiked up again, moved sideways, spiked up again, moved sideways, spiked up again, moved sideways, so on and so forth. This is how really, really strong stocks move higher, is they don't spike and then crash. They spike and then they just consolidate sideways. Because what does that mean? I guess I should demystify this, because as a technician, none of this is magic. It's just simple crowd psychology, supply and demand. It just means that every time it pulls in, there's a buyer waiting. Because you better believe there's profit takers on the way up. There's people who have bought at lower prices and they're selling. You bought it at 3, it shoots to 6. Unless you're insane, you're going to sell some. The thing is that as it pulls lower, there's people buying in. And to me, those are likely the shorts. Those are the people out there who are waiting for any kind of a pullback in order to get out of their position. So as long as this pattern continues, I'm sticking with it. Unless one day I reload this and the data's come in and the short float's like below 20. Then it's not super heavily shorted anymore, and the whole game for me is over, because I don't really play the fundamental story of that guy. EXRT. OTC. Yeah, there's no technical analysis to do on something like this. Again, I'm not like a sycophant that says technical analysis is this big, wide thing. The stock, no one cares about the stock. It doesn't trade. So there's no technical analysis to be done here. This is a pure trade on whatever this company does. Biotechnology. So what are they releasing? When are they releasing it? That's the kind of thing you have to look for with something like this. This is just a stock that's not basing because there's a fight between the buyers and the seller. This is just basing because nobody cares. So I would just look at that as more of a fundamental play than anything. Symbolic. You can see anytime you see this line here on my chart with the little alert, this is just my bot. I'm a quant, so I run models. Those models tell me what to trade and where to trade them. Gives me the time to hang out with you guys and do these things while I'm not taking the trade personally. I'm just doing my analysis. My analysis allows me to sometimes take trades later. And I'm looking for a pullback on this one. Looks like I'm not going to get it, at least based off the action today. It's just a great looking overall stock here at highs. I really like the look of this one. I know, You know, I've seen you a bunch, and you always come up with really good looking names. So it doesn't surprise me by any means. But yeah, that's a great looking name for sure. Really nothing to say here. I think this one's actually pretty heavily shorted too. SYM. This is one of those robot things, right? Yeah, 30% short float. Again, I'll say it till I'm blue in the face, right? I'm not one of those that's, oh, the shorts are eating my soup and damn those short sellers. I love short sellers. Generally, they're right. Most things that are heavily shorted go to zero or go down for a long period of time. So generally speaking, if you're short, if there's a high short float, there's a high short float for a reason. The company sucks. The rare time that the stock is short and makes a new high, that gets me really interested because they're wrong and they have to cover. I'm not one of those, oh, there's naked hidden shorts that no one's ever heard of. And in 5 years, there's never been a single report to show and all of this stuff. Of course, there's a little bit of corruption in the game. Of course there is. But if you're short a lot and the stock is ripping, broker doesn't like you. Broker's not your friend. He's going to make you cover. So I look at this and I say, yeah, that's got to go eventually, right? You gotta have that short float resolve itself in some way, and that way is just likely higher. I can make that even bigger there. Sony, new all-time highs. The market gets really hard to do technical analysis here when you're at all-time highs. You can do some fancy Fibonacci work. That's not the fib tool. That's the fib tool. You can do some fancy fib works for targets like this. The 6.18 extension of this gets you like 32, 33. But other than the fact that this thing is in a very strong uptrend, kind of easier to look at ADRs like this. The fact that this thing is in a very strong uptrend and is making new all-time highs, what do you do with that other than it's strong, right? There's a lot of studies that you can read of what happens if I just buy stocks to make all-time highs. Generally speaking, you outperform the market. And more importantly, you outperform people who buy stocks at all-time lows, like all the time. So buy your all-time highs, not your all-time lows. That one looks great. HURA. Speaking of all-time lows, again, you want to buy the stocks at all-time highs. You want to sell the stocks at all-time lows. So what is it? I think it's option L. No. Option I. Yeah. So this is a good looking chart to the upside. This is the inverse of this. Can these things find a bottom and rip? Absolutely. Will this thing ever be worth $200,000 a share again? Absolutely not. So your question isn't a technical one with names like this. Your question is, this thing is down, it says 100%, but right, it's rounding. So it's 99.999999999%. What is going to stop this trend? It's not going to be earnings because they're hemorrhaging money. They're losing 21 cents a share and they're only worth $2 a share. So they're losing 10% of their value of the company in shares every single day. Not something that I would want to buy. So, anytime I see biopharma, biotech, whatever, that just makes me think that this is a fundamental play. You're assuming that whatever this company's coming out with is going to be a good thing. And then the other question you have to ask yourself is, when do they need to come back to me to raise money? So you just go and you look up the fundamentals of the company. And you can do that just by, let's go in, you can do more financials here on TradingView. You can just take a look, right? So where is the cash amounts? So this thing, right, we know hemorrhages money, right? Loses $10 million a quarter. And they have $6 million in debt. How much do they lose? So they have negative $6 million in free cash flows, and they have $12 million in asset a quarter. So in 6 months or less, this company has to come to you with its hands out and say, please give me more money. So unless you believe there's something that's going to change that, no amount of cup and handles and any of these things can help you. GLD, gold. Gold is, I don't know, it's funny that people go, this is an AI-driven market. It's like, okay, explain gold to me. Commodities and commodity super cycles generally continue way longer than people think. Way longer. And I'm, for one, part of that because I bought gold right here as it broke out of this really long term cup and handle. So I bought gold in around the 200s and then sold it around the 250s and felt like a genius. And now look at it. So there's really no TA to be done on this one other than you just had a really nice base breakout, like super nice base breakout. So I would not consider selling or shorting this myself unless it gets back into this range around 300 and starts to move lower. Because you had so many people, myself included, tried to take a little bit of a short here, that tried to say, okay, maybe that's the end of it and we're going to do a little bit of mean reversion, and then it just ripped. And today we're hitting another new all-time high here on gold. I don't short all-time highs, right? I buy all-time highs. Now, I'm not going to buy this after it's broken out and moved this much. I'm really kicking myself for not buying this base breakout. So until then, look for a pullback, maybe to the high end of this base, or maybe look for some sort of consolidation. Maybe another base like this gets built. Again, I always describe commodities as nothing than everything, right? If we go back out to the weekly chart, this is a 4,000 days. So 2011 until 2023. So you're talking a 12-year long nothing. And then it just rips. And that's what you can do, cocoa? Right, this is cocoa from 2016 to 2020 or 2023, and then it rips. And you can look at platinum. Right, platinum did the same thing here from 2021 to 2023 and then rips. This is how commodities move. They do nothing, and then there's some shock. In this case, it was the inflation, and then they rip. And if you catch them when they break out, great. If not, in my opinion, just stay away. Man, you guys are going. I love it. Oh, and I see the Strat Soldier there. There you go. I'll get to you. Again, I'm still way up here at Chewy. I see it, and I'll get to as many of you guys as I possibly can in the next half hour, but I just want to make sure I get it in order. Well, you can see I've already marked up Chewy. I always say I've been trained to buy smiley faces and sell frowny faces, and that looks like a smiley face to me. Got a huge resistance zone up here at 50 bucks. So until it gets there, there's really nothing I'm interested in. Let's get up and through that $50. I don't want it to happen on some weird dude on the internet who has a cat avatar coming back out. I think we all know who I'm talking about. The fact that it's gapped down here on earnings, this is an earnings report, and it took that big spike down until it fills the gap and starts going. This to me is dead money. And I talk about this all the time, how to me, dead money is worse than losing money. Totally fine with losing money. I do it all the time. As a systems trader, there's a lot of my systems that are not right very often. They're right, 55, 60% of the time. Means 4 out of every 10 trades I lose. So I lose money a lot. Don't care about losing money. This would kill me. This is 2022, so this is 3 years of nothing. Right? You're down a lot, you're up a lot, but then nothing happened. So this is, to me, is a set alert at 50 bucks. Wake me up when you get there. If you don't get there, not interested. What's my page? I like you. Oh, thanks. I'm Michael Nauss CMT everywhere. Right? I think it's like the title of the thing. But if you Google Michael Nauss CMT, right, Twitter, YouTube, TikTok, Substack, you'll find me everywhere there. No aliases, just my real name. As a CMT, how do you approach the market? Do you just buy and hold long term? Or do you constantly rebalance? I am a quant, right? So as a quant, I build systems, right? So these are some of my systems. And just to get real nerdy with you guys, right? These are all back tested 25 years, and you can go on statsedgetrading.com. You can go on my website. You can read all about them. It's like Monte Carlo simulations, as nerdy as you want to get. But the moral of the story is by running back tests and by looking at systems, I can point and prove that this setup works over time, not all the time, right? You can see the win rate of all of my swings are 54%. But I know that if I continue to do that thing, that I'll be right 54% of the time, and I should achieve hopefully somewhere near these results that have been back tested again since the year 2000. And from there, I take that and I apply technical analysis to it. So if it gives me 5 things to buy based off this setup, and I can only choose 2 or 3, that's when I'll use technical analysis for it, right? So yeah, Michael Nauss CMT on YouTube, wherever. statsedgetrading.com is my website. HUMANA. Yeah, no shot. No thanks. Right, so this is not only down, but this is down and dead money. The bet I think you would be making here is that, is this going to be a lower high than this one? If so, maybe you could start a very slow recovery. But part of my problem with buying things that are down 80%, 90% is that there's some guy, poor guy, holding from $9 and someone else holding from 6 and someone holding from 5, 4, 3, 2, 1. All of those people are looking to get back to even. And we've all done it and we know we shouldn't. So the guy from 5, say this thing spikes to 3 and there's that guy in there from 5. He's going to go, man, get me back to 3. I'm going to take my loss and get out. So you have bag holders all the way down. This is the visual representation of bag holders. And when you have bag holders, you have people who are very eager to sell. It's why AMC will never go back to where it was, because you have so many people who got like sucked into that cult and bought so much that if they ever get back to even or make a little bit of money on it, they're going to cut. And the more of these bag holders you have stacked on top of each other, the harder things are. It's the exact opposite of something like an open, where you have kind of bag holders now in the other direction. You have shorts that are, locked in from $1, $2, $3. If you get back down to that price, they're going to cover. They have to, right? So, you have to make sure that you're looking at the right thing. And for me, it's just to say, I want to make sure that I'm on the opposite side of the bag holders. I think is a really good way to look at charts, right? GameStop. GameStop's kind of interesting. I tried to buy some last week, and I saw, as much as I rag on this thing, it's going to be a Bitcoin play now. The guy's kind of put his whole lot in with crypto, the same as everyone else. He's done nothing but saying, okay, I'm now a Bitcoin holder. And as a Bitcoin holder, I'm just kind of hoping that things work out in the Bitcoin space. Now, the problem is you're paying a bit of a premium on top of Bitcoin, which is not ideal. But this base break actually looks pretty nice. So the question is, can we get to fill the gap? That's around 28. This, just kind of take this out of your brain, this $100. Like, make sure none of this craziness or this craziness is part of the chart anymore, because the Catman lost his power. There's no longer the massive short float that there was anymore. It's just a stock, and it's a stock that is heavily invested in cryptocurrencies now. So as a crypto stock, do you think Bitcoin's going to go higher? That's how I think you need to look at that kind of thing, right? I see a strat soldier. Apple to all-time highs, Strat Soldier says. It looks like it, man. I have that highlighted just to remind myself where my investment system got me in. But we are tapping. We are tapping the door. Let's put this one in, of all-time highs right there. People who are bearish on the market. Apple, one of the biggest and most important companies in the world, knocking on the door of all-time highs. Is that bearish? I don't think that's bearish, not to me anyway. It's I was a little bit worried when Apple was dramatically underperforming, but we have the laggards, which are Apple and Tesla, both ripping and getting close to all-time highs. If you have both of these very important names hitting all-time highs as a market component, I think that's a great thing. Asking about Chipotle, another wicked downtrend. As soon as we broke this $50 area, that's where I started to get worried about Chipotle. Right? It did its split. It's funny, its split was the exact top. That's where it did the 50-to-1 split. And ever since then, it's just downtrending now. I think they lost their CEO that made all the magic to Starbucks, which is also not doing anything. So to me, this is one of those dead money plays, right? This is put in a big top, and now it's pulling back here. So until we put in a base and start to resolve that base higher, this is just dead money. And again, I vehemently hate dead money. I hate it because if I buy a stock at 10, it goes to 9, and I get stopped out. It's fine. I took my dollar hit. I'll move on with the next one. If you sit in a stock and you don't have an out based off of time, the problem is you just kind of convince yourself to stay in it forever. And because you're not seeing the loss, like say you buy a stock at 10, it just hangs around 10 for a year. Well, you don't feel like you've lost money because the P&L in your broker statement doesn't say negative. So you kind of still feel okay with it. The problem is that you're losing an opportunity cost. So it's an invisible cost, but it's still a cost. You could have been in any, right, as opposed to CMG, even though it hasn't really moved much. And if it does, and say it doesn't move for the next 2 years, it's like, what do you could have been in pretty much anything in this market and making money. ALLO is the best opportunity in the stock market. Someone says, I just knew it was going to look like this when someone says ALLO is the best opportunity in the stock market. As soon as I saw that, I'm like, this thing probably sucks. So from $50 down to 1, that's a whopping 97%. And again, when it comes to these therapeutic type companies, it is really just a bet on what are they working on, when do phase 3 trials come out, and what is the probability that they're going to pass. That's it. That's all there is. Because say, I have no idea, but say this is a company that's trying to cure cancer. If they cure cancer, it might go back to highs. It might go back to highs. In which case, that's a great opportunity. But when, right, they are burning money, because you have to. If you're a therapeutics company, you have to burn money. You can't sell your drug because your drug doesn't exist. So if you're one of an early stage biopharma or a therapeutics company, you have to burn money. You don't have a say in the matter. So the question is, at what rate are you burning money? And when are you going to be able to either get bought out by a company that can market your drug, or when are you going to be able to market your drug yourself? Most little junky companies like this that have a drug on the horizon, they get bought out, right? So this one might get bought out for like $3 to $5 or something like that. If the drug is good, and if the drug is bad, this thing goes to zero, goes completely bankrupt, and gets wiped off the map entirely. So let's make sure I'm not. Oh, Dix, DKS. See, this one looks fine to me. Strong Dix. Yeah, just holding up nicely. But again, the whole dead money thing. At least this guy pays you a little bit of a dividend to be involved. But, this is a set an alert near highs and wake me up when it happens. Or if you're more of a support guy, right, set me an alert at this area at 172 and I'll buy some there. So I see some thank yous. Totally fine with that. Thank you very much. Thank you, NVIDIA. Yeah, NVIDIA is very interesting. So this is one of those, you can see if you zoom in, there was definitely somebody selling up here at 183 before. And now that we're getting back to that price, it makes me think that someone's gonna take a shot there. So the question is this too big of a move to buy that 183 break? If the AI revolution is continuing, NVIDIA can't be left behind. Right? If we push this here, it just can't be. So at some point, if SMH, which is doing great today, which is the semiconductor index, if that's hitting new all-time highs, NVIDIA is going to move with it. Right? The question is, where is your money? So all semiconductors are going to move together. So the question you got to ask yourself is, where is it best to put that semiconductor money in? right? Is it Intel? Now that the government's getting involved, I'm kind of interested in Intel. Now that it's finally broken out of this base, to get this maybe some Intel on the pullback. Is it AMD? Is it MU? Is it what Oracle? I know that's not the semi, but it's all in the kind of the same space. Or is it NVIDIA? Or do you just go SOXL, which is a, here we go. This is a 3 times semiconductor space. Now, a couple caveats. I don't pick a 3 times index in order to get 3 times my money. That's not how I look at it. I don't put, if I was going to put $10,000 into semis, I don't put $10,000 into SOXL. I put $3,000 into SOXL. I like to use it as a way to not put too much into, um, I don't have to put as much into this, so I can put more money into other things. It's not take a bigger bet because it's 3 times leveraged index. It's take a smaller bet so that you can take more bets in other places. Because if you have an edge on the market, it's all about having like multiple edges across the market. Not to say, so if you have an edge of like 55%, you want to take as many small trades as you possibly can because you'll get closer to that edge. You don't want to take a large edge or a large bet if you have a small edge like that, which to be honest, all of us just have small edges. And if you think you have a bigger one, I just want to remind you that it's a bull market and we all feel like we have massive edges right now and they will go away. It will. Just trust me. Trust me, bro. Um, so yeah, as many small bets as you can, understanding you want to keep them as uncorrelated as possible. Because when the bull market comes to an end, which it will, I don't know if it's this year or 5 years or 10 years, no one knows. You want to make sure that it's the real traders are the ones that make a bunch of money during the bull market. And I will just say, if you are not making a bunch of money right now, what are you doing? Right? Your equity curve should be at or near all-time highs, and if it's not, what are you doing? It's not it's not because I'm a genius that my equity curve's at all-time highs. It's simply because the market's going up all the time. The question is, when the party comes to an end, how much of that do you keep? Right? Say you make 200% to the upside during this bull market. You like triple, quadruple your money. And then we pull back. Okay, right? You will get hit, but do you get hit 20, 30%? Do you get hit 50%? Well, now you've given all your money back. So what was the point, right? So small bets as much as possible. Um, I wonder if someone's just talking about Macy's. They said M. I don't know if they're talking about me or they're talking about M. Macy's is interesting because this was one of these left for dead stocks, right? If we just draw a long-term trend on this one, everyone just thought Macy's was going bankrupt. And recently, it just kind of broke out of this pattern and broke out on earnings, which I like. As someone who will never listen to an earnings call or read an earnings report or any of that kind of stuff, it's just not what I'm interested in. I like companies that everyone kind of leaves for dead and then just perk up out of nowhere. So if it can kind of hold this downtrend line, which is sitting around 15 bucks, I think Macy's an interesting. Some of these stories, if the bull market rages on, there's going to be some turnaround stories which get everyone really excited and say, okay, yeah, this is a company that survived when Bed Bath and Beyond did not. So maybe they can turn it around, and these rebound turnaround companies may be interested. And Intel, I always think of when I turn to this. Everyone kind of left Intel for dead, and it spent about a year just in this base not doing anything. Well, what if it's not going to die? Does that mean it's going to go all the way back to 70 bucks a share? Maybe not. Maybe not. But what if it gets back to like 60 bucks or 50 bucks? Well, it's like a 50% return from here. That's amazing. DLTR. Dollar Tree. Dollar Tree is a nice looking pullback, nice impulse move higher. One thing I like to do on these pullbacks is take an anchored VWAP from the low and see if we can hold that zone. So what does this line here represent? This zone. This to me represents simply the average price of the average market participant who has been kind of dollar cost averaging from the lows. They're sitting around 89, around 90 bucks, 89, 90 bucks. So the last earnings disappointed and this thing's starting to pull back. I would personally look to see if this zone holds, and this would be my load in zone. If this area holds, then maybe that it ends up being a bit of a higher low play, right? Where you have a push up and then a pull back, and then we start going from there. So I would watch this kind of $90 area. If we hold 90 bucks, it's interesting to me. Again, the reason I'm interested in this, where I'm not interested in a lot of stocks and downtrends, is just the strength of this impulse move. Somebody, some institution, something started buying this thing in March and April and bought it the whole time up. And now it's getting a little bit of a pullback. So this is kind of the area to watch. If we lose this, then maybe this was just another kind of dead cat bounce and we're working our way back to lows. I don't know. Again, I like areas like this that have very simple do or die points. It's either going to come in here and it's going to hold, or it's not. And if it doesn't, you just kind of leave it alone. What's this technical tool? The anchored VWAP. So a lot of people know about VWAP when it comes to just intraday VWAP, where you put VWAP on your chart and you can see the market track around it. What it does is it's basically a moving average that combines volume and you pick the entry point. Great book from my buddy Brian Shannon is maximize trading profits with anchored VWAP. It essentially just gives you the average price of the average market participant from a certain level. So if you started, say you bought a little bit of DLTR every day, starting in this area right here, this would be your average price because you're buying just a little bit on the way up, a little bit on the way down, and this is your average price. The reason anchored VWAP can be important is because hedge funds and institutions can often get paid based off of what their fills are versus VWAP. So if I'm like, hey man, I want you to buy me $1 billion of Dollar Tree. Obviously, can't go in and just hit the button to buy $1 billion worth of Dollar Tree. The thing would spike 10%, and you would get a real shitty price and then fired. So how I will judge your performance is say, how close do you get to VWAP? Right? If you get under VWAP, then I'm going to say you did a good job. If you get way over VWAP, I'm going to say you did a bad job. And then your bonus will be tied to it. So you can see Ken Griffin testifying, talks about how most of the trades from Citadel are filled off VWAP algorithms. Warren Buffett talked about how sometimes he sends his trades to a execution broker and they fill off VWAP algorithms. It's not going to determine the direction of a price, but you're going to see a lot of, if you start drawing these, you're going to see a lot of activity occur at them. UNH, full disclosure, again, I'll always tell you I own some UNH. I bought a little bit as it did its initial crash, and then I sold some, and then I got stopped out the rest as it pulled back here. When we undercut this low right here and then bounced, and we bounced pretty quickly there, when we undercut and bounced, I bought a little bit more on that undercut and rally here. So I own some. I sold a big chunk of. I'm planning on holding the rest like forever. Just put a stop at this low and just put it as an investment. But just again, full disclosure, I own some. So that's my plan. As long as we hold this low, I like it. Just know that it is being sued by the government, and that is always a scary thing to happen. So expect 10% up moves, 10% down moves throughout it. It's just you don't want to get sued by the government. That's not a good thing to have happen. However, I look at it and I say, well, this is a massively important company to just the economy as a whole, and it's down 50% from its highs. So as a like value bet, it seems like a good price. If you take advantage of some of these sell-offs, they could become great trades over time. But again, I've already taken some out. So on a short-term basis, right, you just want it to hold this gap right here. But a long-term basis, as long as it holds 250, it's interesting. But this is one like the kids might inherit this thing. How many times do you get huge companies? Imagine you woke up this morning and Apple was cut in half. I'm gonna do the same thing. I'm gonna look for a chance to pile in a bunch, and I'm just gonna hold it. Right. Uh, Grab. Grab. This is like the Uber of China or something. You can see I already have this marked up because this is just a great looking chart. So again, this is the anchored VWAP from all-time high. We just talked about this. So if you started to buy Grab at the worst possible price, you started to buy it at its all-time high, you can see how well it respected this, right? Every time it got back there, that was resistance. And when it started to chew through it, it started to act as support. So just showing that these prices are very, very important. Then it based for a long time and it broke out. As long as you're holding this kind of 550 on Grab, I really like this one. I don't have any. I wanted to. I just, by the time I saw it, it was already up here around $6 and I wanted it around 550. That's a 10% difference between when I wanted it. So I just left it. If it pulls back to 550 and holds, I'll probably buy some there as a second chance. Like I missed the initial move. You know, it gets into this 575, 550 area. I'll probably buy some there if it's holding. But this one looks great. Now, do I think it get back to 16, 17 over time? Sure. That's why I really like it. My stop would just be in kind of 450, right? So I'm risking a buck to make like 5 or 10. Sorry, got that mute in time, which is good. But yeah, I really do love. I think Grab's a really good one. ASTS, a lot of the space names are looking interesting. Again, it's part of it is that this is why I was so hard on when people were buying or bringing me like shit that was hitting new all-time lows. Is a lot of everything looks great. The question I think you need to ask yourself more than should I be buying? It's more of what should I be buying? And more importantly, how should I be keeping what's my plan to keep the money? Again, I don't say this to pretend that I'm like some guru or genius or something, but myself and pretty much every market participant is making a ton of money this year, like a ton of money. You know, accounts at all-time highs, hitting triple-digit returns should not be uncommon. The the question you have to ask yourself is, what's your plan when it all goes wrong? Because it will. It's just it will. You can see a lot of gray in this beard. I've been around enough that there will be another bear market. There will be another pandemic, war, whatever causes it this time. Who knows? But you have to have that plan for what to do when things go bad. So ASTS looks great. You know, we talked about SYM, which is robots, right? Robots look great. Space looks great. Psychedelics look great. Drugs, right? PSIL for psychedelics look great. Even the worst sector in the world, which is the cannabis sector, is looking great. When everything is looking great, it becomes more of a question of what do I put my money into? And for me, that just comes to relative strength. So, what do I think of ASTS? I like it, but do I like it as much as Rocket Lab? No, I think I like Rocket Lab better because it's closer to highs. You have to go through and you have to look at these as themes. And sometimes it's just easier to buy the thematic ETF. So UFO, which is a hilariously awesome ticker for the space ETF, just broke out to all-time highs last week, right? So that is UFO will have ASTS, Rocket Lab, a bunch of these names in them. Maybe it's best to look at these. Like NLR is an ETF I've been in since this 100 mark for ages, and that is uranium. So it's uranium nuclear. So this has SMR, OKLO, NNE, but then it also has CCJ, CEG, some of the bigger uranium names in it. I am, the older I get, gravitating more and more to these thematic ETFs because I would hate to like buy SMR, which I did, and then have OKLO be the one that really rips, right? So instead of having to guess which one, I am more gravitating to the ETFs. So like PSIL is a psychedelics ETF. I really think this year or next year, the psychedelics are going to make a wicked, wicked move. Um, I am currently holding a bunch of this MindMed, which is holding up great. Did a nice little dip and reverse today. And, I currently have a bunch of this holding, but the more I look at it, the more I'm wondering if I should transfer that into PSIL. Because then if it's one of the other ones, ATAI, which is another psychedelic name, CMPS, which is another psychedelic name, the I I am less worried about being wrong on. It would suck to be right that psychedelics are going to do what people think they're going to do and help with anxiety and depression and all of this stuff that they seem to be helping with PTSD, ADHD, a lot of these things. It would suck to be right about that, but then wrong about which instrument wins, which company wins. So for space, I own some UFO because I don't know whether ASTS or Rocket Lab is better or whatever that is. But when I saw UFO last week break new all-time highs, I bought some. And then there's a very limited world where you have like an ASTS do well and Rocket Lab not. Like Rocket Lab go down and ASTS go up. Generally speaking, all sectors move together. Same with MSOS. I'm not going to guess which weed company does the best. What I'm going to do, and I took a trade on this earlier this year. What I'm going to do is if this base looks like it's going to resolve higher, I'm going to buy some MSOS or MSOX, which is the leverage version of it, because I don't want to know which of these does well. I just want to own the sector. So that's kind of my thinking on space. I'm not smart enough to know which space company's good. I'm not smart enough to know which psychedelic company's good. I just think I might be smart enough to know which sector is going to pick up and then go from there. So just so I'll go back to you guys in a second, but just so I'm clear with you guys what the trade-offs of doing something like this is that you are exchanging risk for reward. So say, because again, MindMed's the thing I'm currently holding. Say this thing ends up being the thing, and it goes to 50. If you follow my stock twits account, that's my meme. I think it's going back to 50, which is just these highs right here. So say I hold MindMed and it goes back to 50. That's 5 times my money. That'd be amazing. That I obviously would love that. PSIL in that case probably wouldn't 5x. It might double from here and go to like 36 or 40, which would be right here. But I'm lowering my risk by owning the sector, right? So basically you're always going to get the good one, but in exchange you're always going to get the bad one, right? So if you're owning the whole sector, you're going to be right more often and your return is going to be lower and your risk is going to be lower. There's no way in finance to have a wicked high return and a super low risk. So that's why I say with UFO, which is what we were originally talking about, I'm going to get whichever Rocket Lab or ASTS is the winner, but I'm also going to get the loser. So it's just a way to diversify that bet. Listen, every time BB is a sore topic for me. I'm Canadian. we we were kings of the world when it came to the cell phone for a brief moment, and then we let that completely go away. So a little bit of a sore topic here. BlackBerry to me kind of looks a little bit like dead money, right? We're inside this base. It was priced for 0. It looks like it might not be a 0. That's a good thing. That is not good. It looks like it might not be a 0. Also looking at this, it's probably not going to be a 15-20. This is one of those things, just like I talked about, get the GameStop and the AMC spikes out of your way. If you're ever analyzing those charts, we're not going back there. The meme people have moved on, right? So it's never going back to 28. Well, not never. No time soon do I think it's going to go back to 28. However, it's a nice, just looking at the short-term pattern, it's consolidating nicely, right? You're getting this kind of this nice tight consolidation here. So if you end up resolving this wedge or apex higher, it's not unreasonable to think this thing could get back to 10. I don't even know what they do now. They obviously don't sell phones. Like, I don't think when's the last time you've seen someone holding a BlackBerry phone? So again, I don't know what they do, but I know what they don't do, and that's selling phones. I think they do something with like cars or cybersecurity or something, I read. They're profitable, right? And if you're making money, at least you don't have to worry about people raising money. They have $100 million in revenue. Wow. Drop the ball there on the cell phones. But it's a nice looking pattern. So you can take a shot on it. I would just have what we call a time stop. I've also uh I've also heard it as a shot clock, I think is another way. And the idea between time stops or shot clocks is the you're just giving yourself not only a price, like a stop loss and a profit target, but you're giving yourself a time. So you're saying, I think that BlackBerry, if it breaks out of this base, I think that that's a good trade to make. So, okay. So a lot of people will look at that and say, okay, well, what's my stop loss? Well, if I'm buying it here as it's breaking out, maybe my stop's at like 350. Okay, so I'm going to buy BlackBerry. I'm going to put a stop at 350. Great. The additional thing that I think you should do is you should have attached to that a time and just say, I am going to give this 2 months, 3 months, 6 months, whatever you think is necessary. And you're going to have an out and say, if I am not up a significant amount of money, whatever that is, in this time, I'm not doing it. Right. So, because if not, you could just be stuck. Imagine if you're someone who bought this in 2023 and it's still the exact same price and they're not paying you a dividend. So you're just sitting there while the market's screaming to new all-time highs and you're going, yeah, but I really like my BlackBerry. Just have that. And then it could just be easy enough as asking, I won't say the name, but asking whatever assistant you use for your phone or whatever to remind you in 3 months, right? Remind me in 3 months to, if I still have BlackBerry, to sell it or, to check on the position or whatever it is, just so that you have the out. You don't want to be one of those people that it seems like you see all the time, especially online, where their whole identity is tied up in the stock that they own and they'll just never let it go, even though it's not going anywhere or more importantly, going down. So just have that out, have that, that idea behind that as well. So quickly, I only have a minute left, so I just want to quickly check on the market with you guys again before I go. I appreciate it so much, and we're screaming to new all-time highs. So I'll go back to what I said in the beginning. Until these shorts pay dearly, right? Until they get out of their position and cover their position, I think Godzilla could, walk down Wall Street and they would need to cover. And it's why every time we're seeing any sort of a downtick, it's getting bought up almost instantly. And until that happens, just make sure again, I don't know for sure. That's just my idea. Just have a plan and try not to be too short, I think is kind of the best way to do it. So appreciate everyone for coming by. I know I missed a couple because there was holidays and I was traveling and stuff, but I'm here Monday, I'm here Friday. Different people come through all week. So if you don't like my opinion on something, come ask the next guy. Maybe he'll give you something you like a little bit better. And